Hi, I'm Vince Molinari, and welcome to FinTech TV's The ETF Rundown. And we're broadcasting from the iconic New York Stock Exchange. I'd like to welcome John Kerschner, the head of U.S. securitized products for Janus Henderson Investors. Welcome to the show, John.
Thanks, Vince. Happy to be here.
Well, delighted. Maybe you can kick us off. Tell us a little bit about Janus Henderson's JAAA ETF.
Yeah, I'd be glad to. So JAAA, the ticker is JAAA, is a ETF that invests solely in CLOs, collateralized loan obligations. So this is a securitization no different than any other securitization that is done with auto loans or credit card loans or student loans. You're just taking a portfolio of leveraged loans or bank loans and combining those loans, cutting up the cash flows into different tranches of risk, and you have a CLO. So the ETF, the idea is a very high credit quality, 90% at least AAA, and floating rate, which is key in these times where the Fed is involved in the markets, raising interest rates that normally hurts fixed income securities, but not floating rate securities like CLOs. So safety, liquidity, floating rate, all great solutions for investors that are trying to navigate this difficult market.
Well, that's super helpful. So when you look at this environment, and we try to figure out, John, when you look at a CLO or you look at other floating rate instruments, why would you invest in those in an inflationary environment like we have now?
Yeah, this is a very unique market. And what I mean by that is normally when inflation's rising and the Fed is raising rates to counteract that inflation, the economy is doing very strong, right? Right now, the economy is actually slowing, but inflation is higher for all the reasons we know about COVID and supply chain issues. So when the economy is very strong, you can invest in other type of floating rate securities that have more credit risk, like leveraged loans and bank loans. The nice thing about CLOs is you can choose the actual amount of credit risk you want. Obviously, in a JAAA, which is 90% AAA, you're basically taking almost zero credit risk. And that's the unique nature of this product. Floating rate, but no credit risk. That's what you want in this type of environment.
So it sounds like a bit of a flight to quality with 90% being allocated into AAA and really doing tremendous risk management or minimizing that risk exposure.
Exactly. We caution investors right now. Look, I get that a lot of investors are concerned about raising rates. They're looking at their portfolios, a lot of them down, both bonds and stocks, because on the bond side of higher rates, and they're trying to find a place where they can get some yield. Right now, AAA CLOs are north of 3.5% of current yield. That should only go up as the Fed continues to raise rates. And yet they want safety because they're concerned about the economy actually slowing down. We may or may not be going into recession. People have different views on that, but no one can argue that the economic growth is slowing. And so safety, liquidity, floating rate, all very important concepts right now for investing.
Well, it's a great segue for my next question. When we talk about fixed income, does it always have to be fixed?
That is a great question, and it's in the name. So a lot of people assume that fixed income means fixed rate of coupon interest, and the vast majority, about 95% of U.S. fixed income is fixed. The main areas of floating rate are leveraged loans, which, like I said, have a lot of credit risk. The average rating of the leveraged loan index is single B, so high yield, pretty high. Are pretty low credit quality, and CLOs, which are made from leveraged loans. And like I said, the CLO market's nice because you can actually choose the amount of credit risk you're going to take. In this instance, we're taking almost none.
Thank you for that. Super helpful, because I'm one of those people who are a bit confused by the fixed. John, you have a tremendous team at Janus Henderson, but when it comes to this particular segment, this product, why are you guys kind of so well suited to execute on it?
Yeah, well, thanks for that, Vince. We're very proud of our team, but it's really two things that you need in order to launch a product like this. You need a world quality ETF platform. We have that at Janus Henderson and have for almost 10 years now. That's led by Nick Cherney. And then you need the portfolio and analyst team that have invested in CLOs for a long period of time. There are about 130 CLO managers out there. We spend countless hours getting to know these CLO managers, how they manage their portfolios, what credits they look at. And then we combine that knowledge of due diligence with our own corporate credit team that manages leveraged loans as well to make sure that the CLO manager's view of the world aligns with our view of the world. And if they don't, we won't buy that CLO. So we are very choosy about the CLOs that we buy and put into this ETF. And that's the active management that people are paying for when they buy JAAA.
Well, I think it's flight to quality within flight to quality with the filters. So kudos on the active managed strategy within all of that. Well, John, thank you so much for joining us today. Congrats on the launch of JAAA and continued best of success with it.
Yeah, thanks, Vincent. It was a pleasure to be here.
It was our delight. Thank you.